Okay, so we all fit into a category. We're either a beginner investor somewhere in the middle, or you're advanced, in which case you're probably not watching this video right now because you know everything already. But depending on where you fit in is going to depend on the investment style that you probably want to choose. I mean, it makes sense that if you're only a beginner, you don't want to be doing advanced stuff and taking on additional risk. So today what we're going to talk about are the 3 different categories that you may fit into and how you can invest your portfolio based on where you land. All right, well, we all have to start somewhere, so let's start with the beginners. Most of you that are watching this are probably somewhere in the beginning stages, maybe intermediate. But if you're a beginner, then there's a few things you want to consider. My thought is that you should take your portfolio and probably be 50% in some kind of passive investment. They could be mutual funds or exchange traded funds, but 50% at least, and probably more, should be dedicated towards passive investing. You really don't know what to expect right now, so picking individual stocks is probably out of the question. But you have to learn at some point, so if we take half of your portfolio and put it in some kind of passive investment, mutual funds, exchange traded funds, now we can start to learn with some of the other portion of your portfolio. If you're only playing with half or probably even less than that, then you can start to experience what it's like to buy a stock right before it announces earnings, or buy a stock that's currently shooting straight up, or buying a stock that happens to be dropping, right? We don't want to do that with your entire portfolio because you have a lot to learn and we want to make sure that you're in the game for the long run. Now, as a beginner, maybe you start with 50% passive, 50% discretionary, and slowly take a little bit from the passive side and move it into discretionary. My personal suggestion is you start 70-30, put 70% in a mutual fund or exchange traded funds, let it do its thing, take 30% and learn the game. Over time, of course, you can just make it 60-40, 50-50, 40-60, and so on and so on. Now, let's say you're an intermediate. You say, well, I get the beginning stuff. I've done the passive investing. I've been burned by certain stocks in the past. I'm ready to start moving on and doing some more aggressive things. Well, you're just going to be less in passive investments. You may not even have any at all. If you find that you're more of an active trader, then you might consider having a kind of collection of exchange traded funds, but you're going to trade them more actively. You also may be interested in doing a little more research and trading individual stocks, whether it be for a couple months, a couple quarters, or a couple years. If you're interested in research, now's the time where you can dig in a little bit deeper and start finding stocks that you like. So the intermediate trader, we would say, could go ahead and be more discretionary. They probably have found an interest in investing and they enjoy that, researching the next stock or finding a good exchange traded fund, or maybe even finding that mutual fund that fits your investment style. And now the advanced trader, if you happen to be watching, chances are you're doing things on your own, you don't need much help, and you're probably more of a stock picker, exchange traded fund picker, and maybe no mutual funds at all. See, an advanced trader is probably someone that can explain all of this to a baby. Right? You understand all of the products that are available to you, and you're probably even using some additional products besides stocks, ETFs, and mutual funds. Usually the advanced traders or investors are starting to look at things like options and futures and currencies as a way to kind of hedge or bolster their overall portfolio performance. And advanced traders also going to understand diversification and just, beyond the sort of crap that they put out from normal financial advisors, like true diversification when it comes to building and maintaining a portfolio. So look, we all fit into one of these categories, and that's cool. Just take a moment and see where you're at and try not to push too quick into the advanced category. If you're a beginner, look, just focus on the passive investing and learn a little bit as you go. You might find that you don't even like researching stocks and trying to find something interesting, and you call a guy like me to do the work for you. See, at Jazz, we specialize in managing your retirement accounts, specifically by picking and managing the investments that are inside of your portfolio. If you'd like more information or want to start working with Jazz, go to jazzwealth.com. Up at the top, you'll see a button that says Invest Now, and I will help you from that point open or transfer your account, wherever it may be. If you have more questions, leave a comment, send an email, or as always, you can contact me directly anytime at